Hey everybody, I'm Sam and this is Antiverso, and today we're talking about why I believe that there is a great opportunity in China right now and probably for the future for a very long time. So there's been so much talking in the media and news about China, communist country, regulation, obviously now the trade wars, a slowing economy, and all of these stuff. But I want to talk on all of these things. I'll touch on them, I'll comment on them, but also I want to look at the fundamental numbers because opinions and news, they could be looked at one perspective or another perspective, but numbers don't lie. So first let me start with, is China a communist country and what really a communist country means? So obviously communist country is like there's socialism, so there's much more power into the state, and the state controls all the companies and how the people live in that country. There is no freedom, there is no free flow of data and information, and also businesses cannot basically compete and do a lot of the stuff that's the way in capitalism, right? So China, it is true that the Communist Party is ruling in China and they've been in power since 1950, I guess. But while ideologically and in theory they are socialist party, right? But if we actually look into the politics and how they're ruling the country, we can see a lot of capitalism stuff. Actually, the private businesses are contributing much more to the GDP than state-owned business. We can see that they are encouraging, competition inside the country. They are encouraging a lot of also trade and good communication, relationship with their countries that are around them. So we can see that they're quite open. Obviously, you can travel to China, right? They want to invest a lot in Africa, in Europe, and basically all around the world. So we can see that they're not really, I wouldn't say they're communists. I wouldn't even say that they're socialists in the way that we want to understand it, or the way that Marx, described it. So I think they're actually ruling the country much like a very big conglomerate company. And while obviously there is a lot of regulation, the government has quite big effect and power over certain businesses, they try to encourage them and to help them. We know that they're blocking some information, right? We know that they are not welcoming all kinds of companies into China, right? They are blocking, Facebook does not work in China, Twitter does not work in China, Google does not work in China, and so on. But as we see, that's mainly on the energy side and on the technological side. And it's kind of the same with US, because if US was in the spot of China, I doubt that they would let other companies from another country to be the biggest inside US. And I cannot comment on politics and what's right or wrong, but what happens is that they support and give a lot of leverage to Chinese companies, and especially Chinese technological companies, like the video that I put out about the top 5 best stocks and companies in China that I like, is because they support them. And obviously, like, why Tencent is so big, right? Why Baidu is so big? They don't let Facebook in, they don't let Google in, and so on. From the company's point of view, this is good for them. So with that out of the way, we talked about communism and regulation. I want to get into the numbers of the slowing economy. And it is true, when we see the China GDP growth, and GDP is basically how much the economy grows, it's been slowing. We see it, but we can also see that the numbers are crazy. Like in 2010, they grew 10%. 10%. This is the second biggest economy in the world after US. It's also the second biggest kind of market in the world. So, they are already the second biggest and they're growing at such rates. This is ridiculous. And we can, compare that to US, and we can see that the growth in US have nothing on them, right? So for example, this last year, 2017, the China economy grew 6.8%, whereas the United States economy 2.2%. That is what almost triple the amount. The economy in China is growing 3 times faster than US. Obviously, the more they grow, the slower they'll start growing, but they're still growing much faster to US, even when comparing how big their economy is. So, the argument about swallowing economy, I just don't believe it. It would make sense if the stock market was pricing this growth, right? So if the stock market was 3 times more expensive in China than in US, I would say, okay, yes, we have a problem, because the stock market is pricing in 3 times faster growth. But when we look at the numbers of the stock market, things look quite differently. So we can look at, this is the S&P 500 index quote from Bloomberg about the pricing of the S&P. This is the kind of 500 biggest companies in US and represents the US stock market. So we can see that the trading P is 20.67. And let's look at the Shanghai Composite index, which is basically tracking the Chinese biggest companies, and it's representative of the Chinese stock market. We can see P of 12.9. Let me just say that again, 20.67 compared to 12.89. Obviously, the price of Chinese companies compared to how much money they make is drastically lower, which means that maybe they're undervalued. Let's then go and look at the EPS. How much on average Chinese company make per year? And that's 207. And we compare that with the S&P's 137. At the same time, by the way, S&P is higher than the Shanghai index. S&P is at 2,850, while the Shanghai index is at 2,668. Then let's look at the price to book. This is basically what's the market cap of the companies compared to how much assets they have, in a very broadly speaking. For the Chinese market, this is 1.4, while for S&P, for the American companies, that's 3.4, which means that, again, American companies are much more expensive. It's the same with price sales, and we can see it. America price sales of 2.2 against the Chinese price sales of 1.07. Let's look at the dividend. Okay, maybe American companies give more dividend. Well, we can look at this, that the dividend of Chinese companies is 0.37, while for American companies is 0.23. So even the dividend is lower. So obviously something is not right. And we can see that especially the big Chinese companies are growing much faster than their American counterparts, right? Like Baidu grows faster than Google, like Alibaba grows faster than Amazon. We can see the valuation. So, by the numbers, we can say that the Chinese stock market is dramatically less expensive than the American one. And we can say that obviously American companies are all around the world. There is much more stability. There is much less interference from the government, and this is true. But we also said that China wants their companies to grow, and it wants their companies to be global too, which means that it will do the best to protect them and also support them. Now, what we can see though, if we look at the Shanghai index over the years, we can see here in 2007 when the economic crisis popped, obviously drastically lower, then kind of drifting. Then again in 2015 there was again a stock market bubble that popped, and it's down. But since then we can see that it has gone up and now it's again down. But we know that China's GDP has been growing steadily in all of those years, which means that even though that at the moment the stock market is around where it was in 2008, in 2007, the GDP of China is much bigger. All their relationships are much bigger. How strong their economy and central bank and overall government, it's much more stable. It has much bigger impact on the overall global trade and economy as 10 years ago, which means that probably now it's much cheaper than what it was. And some might say, oh, it's still undervalued. We saw though that by the numbers, first of all, China is going much faster than US. Even though that it's slower, it's still 3 times faster. Having in mind that their economy is starting to get really, really big, it's the second biggest, their growth is still ridiculously faster than US. In the same time, we saw that by the numbers, the stock market is cheaper. So, when those two things intersect, I believe we have an amazing opportunity, and I believe that China's stocks overall at the moment are greatly undervalued compared to US and even compared to other markets. We can also see that when the bubble happened in 2015, we can see the P ratio going higher to 25. We saw that at the moment the P ratio of the Shanghai Composite Index is 12.9, which means that it's almost half of what was in the bubble. So the stock market is 2 times cheaper than what it was in the bubble, which means that it's probably not a bubble now. So what I'm saying is why the stock market has been decreasing in the last 7 months. All of this has been because of the trade wars, and even we see that the trade wars, maybe they have some kind of very, very weak impact on the China economy, but we see that it's very weak because China now is so big that it has a lot of leverage. They can source different stuff from different places. So in my point of view, they are in a very, very also strong position. Now, I cannot judge is US winning, is China winning. That's not really my concern because I want them both to win. But the fact is that while the S&P has been going up and up and up, the Shanghai index has been going down, down, down. In the same time though, we see that the GDP is not really that affected. We see that the companies themselves post amazing numbers. We can see the growth is just ridiculous. When there is continuing growth where there is already lower valuations even from before that, and compounding that with decreasing prices, I see a very good undervaluation and probably a very good buying opportunity. What I believe is that this decline has been based on fear. It's not on fundamentals, right? We don't actually see the economy slowing. We don't see that cracking, but there is a fear that that might happen. Well, when others are fearful, you need to be greedy, right? That's what Warren Buffett says. You might say, oh yeah, but the trade wars, we don't see them being resolved. We don't know what will happen. That is true. But what Warren Buffett always says is that you shouldn't try to time the market. Nobody can time the market, right? So if you see something that's undervalued or it's very good and it's fair valued, better buy it now, right? If it goes down lower and the fundamentals are the same, you can cost average and buy even more. Thank you for listening. Please comment what are your thoughts. If I'm missing on something, I would love to hear about that. And also consider checking out my Patreon page, which is on patreon.com/antiversal, where you can find a lot of cool information, stock market, investing, mindset, technology, and you can also support the channel so I can create more. Thank you for listening and see you next time.